Let's start with Amazon, right? So what is this? This is the world's leading online retailer. Jeff Bezos founded in Seattle, but of course it is a major player because it has about 145 distribution centers around the world, and it is now beginning to expand into the actual freight distribution. It's got a leased fleet of about 40 planes and planning to get more and more. It's also one of the stocks we own in our portfolio. It's got a market cap of $432.7 billion. That means it's in the first division, people. That makes it one of the 10 most valuable companies in the world, I'm pretty sure. It has no price to earnings ratio because it makes profits every now and then by mistake. If Jeff doesn't get the numbers exactly right, it definitely doesn't pay any dividends. So prepare yourself for a share chart that looks pretty toasty because it's just gone through $900 a share. What a stock. What a stock. What do you say?
Absolutely. I mean, at the risk of punning, it is amazing what the shares has done over the last few years. You know, it's hard to believe that it's been around for a long time, but as little as 5 or 6 years ago, you could have bought it for under $200. You know, so it just gives you an indication of the extent of growth still available in this share. You know, they have a very diversified business. The bulk of it is what they call e-tailing, which is online, and they're the biggest in the world.
So it's online physical stuff where you can buy everything from nappies to, sort of garden equipment and a whole slew of other things, in addition to having quite a lot of digital stuff it sells, like digital media, books, that sort of stuff that
Cameras,
can be delivered wirelessly.
The other aspects of the business, which also very interesting, it owns Amazon Web Services, which is this cloud.
Talk about that.
And
so they built their own server infrastructure, and now they make that available to everyone else.
And I think that's still very much in its infancy. A lot of corporates and small businesses, go through the painful process of trying to kit out their IT infrastructure with their own servers and things. And 6 months later, it's all become obsolete. They need to upgrade.
Funny you mention that, because Vestact, our business, my business, is one that has a website, and it's been hosted at the Internet Solutions server farm in Bryanston, and we're in the process of moving that database infrastructure onto Amazon Web Services.
Yeah. So when you do that, you'll always be current with the latest technology. They also offer not just storage, they offer analytics, which is now becoming increasingly relevant to businesses to understand what their customers are doing and to try and prepare for changes in customer behavior, changes in trends. And you can only do that with big data analytics. So Amazon Web Services, which is not a huge contributor currently to revenue. Revenue is driven by the online business.
But it's very high margin.
It's very high margin because it's largely services, and it's very high growth.
Because it looks as though Jeff Bezos' plan with regard to the main business is just to relentlessly pursue market share at the expense of any profits. So in other words, they'll buy a company that sells nappies online. They'll integrate that into the service solution. They will discount the heck out of everything because they're seeing the long-term opportunity, which is simply to be the world's most preeminent retailer. And I don't think people really here appreciate this, but if you live in America, if you've got an Amazon Prime account, which means that you get free shipping, you pay something like, I don't know, $100 or $200 a year, and then everything is free. And so people order literally stuff all day, every day. They kind of just order stuff. The Amazon guy comes like 3 times a day.
Yeah, and that's where logistics becomes important, because you don't want to be delivering, 3 separate orders to the same person 3 times a day. So the management of that, I think Amazon is also leading that technology.
And they've invested heavily in more distribution centers closer to all the major nodes where people live, so that they can, for example, deliver a Christmas present on Christmas morning that you only have ordered the middle of the night.
Yeah, no, I think that's going to be very popular.
Exactly, because someone else arrived like you didn't know, and oh my gosh, I haven't got a gift for niece X. You just off you go, and then it's delivered by the time that the Christmas lunch is ordered. Okay.
The other aspect of the business probably worth mentioning is that video on demand service that they have, Amazon Prime, which is similar to a Netflix.
And Twitch, which is something that the kids use to watch gaming.
Yes.
So that's also digital delivery, advertising supported. There's a lot going on here in this business.
Yeah, I don't mind, not getting a dividend for the next 5 years if they're continuing investing in these high growth areas.
Okay, so no price to earnings ratio, no dividends, but just an out and out growth story. Even at that scale, you reckon it's hot?
I think so. I think it's going to be a core of any offshore portfolio.
Yeah, exactly. And we own them in all of our offshore clients.